Decent day. How you doing, Paul? And reacted to the reaction. Okay, I was successful fading the dollar, buying euro. I bet Ryan bought cable lower. Good. All right. So let's take a look around. Few important things happened. Okay. So before we get started, Blake gave me a promotion. Tell me if you guys could see this. See that? See my new title? Everyone see that?
It says Chief Risk and Chief Risk Manager.
Get flat right now. Liquidate. Is that what you trained me to do? Or get flat?
That's
Reduce
right.
leverage. Close your account.
Close all the positions.
Close your account and don't come back.
God,
Anyway,
you suck.
That's a margin. Do something else. Anyway, in case you ever do promote me to that position, buddy. I just wanted to show people I had the proof. So what a day yesterday, huh? Nice little peak in the dollar. Of course, BOE, raising rates. You have more kahunas than Jay Powell. And I know Ryan yesterday was looking to buy the pound after the number. I don't know if you're waiting for new lows or not, but it was really a great idea. And Stel, even though I'm not sure if these are the lows that we put in silver yesterday, and gold had a reversal day trying to follow through as well. This is the important event in the metals. Pin bar, yeah. Hope you cleaned up, John. Is here in the gold silver ratio. Okay, so remember me saying it's very important for me to be bullish silver. I need a peak in this gold silver ratio. Yes, well, it's up 16 cents. May not be the bottom. We could still flush one more time after this dollar correction is over. But closing back under 80 is going to be an important signal. And look at where it stopped. Right at the 200 week. So at least you have a point of reference. It starts closing above that would not be positive silver. So, I mean, they could both go lower, but silver start to hold up better than gold. And, it's just a first clue that, things could turn in favor of precious metals if we could get this gold silver ratio to start falling here. Who's in the house? Blake, I know you're here. Stelios, you around?
I am here. Good morning.
Good morning. How are you?
I'm very well. So it's I was talking with a couple of friends of mine today at the gym. They're not traders, but they're in shipping, but they look at markets and they said to me, if you knew what the Fed was going to say, would you have been able to make money? And I said, nope, because it's just, in my view, the whole thing was hawkish, and it was the market was expecting a doubling of the taper, yes, and probably a little bit more rate hikes priced into 2022. But I think they delivered a pretty hawkish message. But from what it seems, the market has been very one way. Maybe was expecting more. I don't know, or they're thinking that this is going to be a policy mistake. And just like in late 2018, you start the taper, you'll have to end it sooner than you think. And, who knows? But if you had given me the text of the Fed before, I would have said, yeah, the dollar is going to spike and rates are going higher. And yes, hawkish, not hawkish enough. Apparently, DJ, I think you're right. So
same thing here, Stelio. If you remember, we had predicted that we might have a hawkish surprise, but predicting that the hawkish surprise is going to be risk positive I really,
Yeah.
I mean, yeah.
Yeah.
What
I had
was
to get out. I had to get out of my SQQQs. You know, that's the
I mean, still, if you ask me, Dale,
up here.
I'm
When
not
it
going
reversed,
to.
I got out of the way.
good?
Yeah,
Good.
I'm not going
Anyway.
to. You know, there is. I haven't even read what the news is saying because reporters have this amazing ability to, you know, post-event try to find an excuse of why you know anything happened.
Oh yeah,
Uh,
yeah.
Yeah, of
They
course,
find
of
the,
course.
after the fact they
Yeah.
concoct something.
Yeah, but no matter what the you know what the arguments are in you know in that side, I think I still believe it makes zero sense. We all know that easy monetary policy has been the fuel, you know, a big part of the fuel of this humongous, like 13-year-old rally with, you know, the little blip we had, like the, what was it, 1.5 months blip we had at the beginning of COVID. And I'm, you know, I can't stop thinking that this initial reaction higher is the wrong one. Because if they keep on you know what the fun part is, that this type of a reaction that we see is actually going to make it easier for central banks to become even more hawkish, because they do need to become even more
Good
hawkish,
point.
having to do with inflation. So this type of a reaction is going to end up killing any chance that the response is not going to be you know, really damaging to the rally. Because as long as the market keeps reacting positively for, I have no idea why, to, you know, tightening news, they're going to be tightening even more because they're far behind the curve and they know it.
You know,
So
it's
at
almost
some point, they're going to find the breaking point. There's no
it's almost
question
like
about
not
it.
what Powell says, but the confidence that people have that he's a great commander of the economy, and as long as he thinks, you know, things are okay, you know, so things must be okay. You know, I've interviewed that one guy who gets, you know, multiple views, Dave H. Contrarian, and he says that, and he's looking for, you know, a blow off and then a crash, but just the confidence in Powell at the helm.
You know something, I'm not buying that so much, because how can you have confidence in an institution? I'm not going to focus on the guy specifically, right?
Yeah.
How can you have confidence in an institution that was until extremely recently denying that there is any type of inflation problem, just to wake up one day and admit what was obvious to almost everybody?
Because of their P&Ls.
Yeah.
They're great traders. So
Yeah,
they know what
that's a different story.
And you guys saw what Pelosi said when asked about.
Yeah.
Oh no! What'd
It
you
should
say?
be-
It's okay.
Yeah, of course. He says, of course, it's a free market. We should be able to do whatever we want. And then I had a friend of mine. He goes, yeah, I'm an investment banker. I'm a junior, actually. I'm working on PowerPoint presentations all day. Why can't I trade? You know, which he can't actually. But anyway, it was interesting yesterday. But what was not surprising today was the fact that the unreliable
Really?
boyfriend, which is the Bank of England,
Yeah.
was surprised us all again. You know, in November, they were telling us, oh, we're going to hike. They didn't hike. And now they've been all turning dovish over the past couple of weeks. And the market was pricing something like 20-25% chance of a hike. And they hiked. So try to figure that one out. I can't. But they hiked to 25 basis points. And, you know, the market's pricing a shallow...
At a meeting that didn't even have a presser, by the way.
Yes, you know, usually the Bank of England, what they always used to do, I remember this from when I was a market maker in sterling, they have the 4 inflation report months where they announce stuff and they change policy on those. So this is February, May, August, November. And November was perfect. You know, it was the right time, everything. They update their inflation reports, forecasts and everything, and they did nothing. And now on today's meeting, they do it. I mean, I don't get it. But
hey, good morning, guys. I want to say, you know, before we get really in the weeds about all this, let's just point out the price action in the markets that the dollar has continued to sell off, and we've seen a rally in the euro, the sterling, the Aussie. We've seen stocks rip to all-time highs this morning. Overnight, we've had the dollar Canadian collapse. Let's not forget the price action here. I mean, we can theorize all you want about this, that, and the other thing, but the fact of the matter is the dollar is weakening and every other currency is rallying, right?
Yep.
I mean, again, we can theorize about everything and anything, but how do you make money in this environment? Right at this moment in time, it is to be selling dollars. Now we have
break that triangle that you had in the Dixie, Blake. I was going to ask to see that.
Well, I think we should be looking at that, right? So here's the euro, pushing the triangle resistance right now ahead of the ECB. Nicholas just asked, well, why is the euro rallying when the ECB just left rates unchanged? I think you have to go back to what you discussed just a little bit earlier. Look, the Fed is perceived as less hawkish. The dot plots beyond 2000, what year are we in? 2021. Next year is 2022. The dot plots beyond 2023 suggest that there is going to be less hikes than originally thought. And, the market kind of saw that as, hey, that was a buy the rumors, sell the news type event. The dollar sold off. That gave a little tailwind to the euro. And, all the ECB needs to be today, especially if Christine Lagarde comes out just a slightly more hawkish than the market expects, the euro is going to be trading back to 115 quicker than you think. So and here we got into sterling rally. We haven't heard from Ryan yet. Brian, your boots on the ground there over in the UK. How do you feel about the Bank of England, what they did today?
Yeah, I think it's brilliant. I think it's hilarious. I mean, this is
well,
exactly
because last meeting they were expected to do something, they didn't. So now now they did. So how do you do that? What do you do?
Well, listen, my main trade for the whole of the FOMC and BOE was to buy a dipping cable over the FOMC and run it into the Bank of England, because I said
I brought it up, Ryan, when you weren't around.
Yeah, the market went too far the other way on pricing out a hawkish Bank of England. I mean, obviously, going a hike, like Stelia said, they should have done it last month. So going a hike in this environment was a surprise, but it was a month too late as far as I'm concerned. But my view on this hike is that it's still potentially only just reversing emergency measures. Going a 15 pip hike is to 0.25 isn't necessarily the start of a huge hike cycle. The Fed have plotted 6 hikes between that 2022, 2023.
Can I just interject really quick? But regarding what you just said, the dollar index has been rallying for I don't know how we haven't gotten into any hike cycle. We're just reducing liquidity, right? I mean, so the dollar's been rallying for literally, for the last 6 months. So
but this is what we've been saying about positioning and pricing. There's been a disparity in this pricing. You're getting rate markets saying, right, well, we're getting 6 hikes, 2022, 2023.
Yeah.
But yields are saying something different. The bond market's saying something different. The curve is saying something different. The curve is already trading 2023, 2024, where they see that, okay, this is going to be the top for rates. This is potentially going to be the top for let's call it the virus recovery, because the Fed projections show that the economy GDP is going to dip 2024. So, we've got a disparity in who's trading what here at the moment. And as I say, the rate markets are saying, okay, fine, we've got the hikes. Bond markets and the curve are saying, and the economists are saying, well, we know where the top is for this. So we're pricing out a long way into the future. And we don't often see pricing going a long way in the future that far, because, most people are trading what happens in the next month, 2 months.
Right.
So, I'm long dollar yen. I've been in this trade over a year. It was specifically to get into when the Fed hikes. Now, I'm thinking I might be at the end of this already before they've even done a hike, because the market is now taking those expectations further forward to what it may mean. So we've not even had a hike, and the market's pricing out hikes already into the future. It's difficult. It's difficult to price this, but like you say, at the moment you go with the flow. You watch your levels. If the big range levels break, then you've got to move. At the moment, euro dollar, it's still sitting in a tight range. Come and speak to me if we're over 115 and heading up towards 118. Dollar yen, speak to me if we're at 115 or below, 112. Cable, come and see me at 135. At the moment, we've got a big move here. We're seeing some big moves. Aussie dollar seeing some big moves, but it's still all within some fairly short-term ranges. And unless we get those big breaks, you've got to listen to the levels.
Okay, well, let's let me take a step back really quick, and guys, I had to jump in earlier because I wanted to show exactly what is happening in the market. And remember, this is a trading webinar. We're showing you guys some ideas. Let's talk about these are some fresh opportunities. Look at the euro right up against resistance. So let me ask you this. Stelio, Steve, you guys were talking a little bit earlier. What's going to push the euro above this resistance today that Christine Lagarde from the ECB can say? What is she going to say? What words will she use that puts a bid in the euro? You guys, what do you think?
Good question. I think anything that takes her off the current. I can't say a specific word that I can think of, but anything that takes her off the current dovish path, which really she hasn't moved away from this path at all. So anything that shows that there's a path to a taper coming. Maybe they're going to be following the Fed, and remember the Bank of Canada was the first to taper. Now the Fed and the Bank of England is hiking. Okay, very small, but still, they're showing that they want to do something. Anything that's going to show that the path is going that way for the ECB, which is not priced in at the moment, I think is going to definitely push the euro above.
Okay, well, Paul just said nothing. The euro is in crap. Look, I don't think that the ECB is going to be able to do anything, and I think most of you guys would agree that the ECB eventually is not going to be able to do anything. But that doesn't mean. Remember, their words matter. Their words matter. Now, actions speak louder than words, obviously, but that's every central bank's biggest policy tool is not necessarily the levers they pull and rates. It is the words that they use going into that. So it's expectations. Whether or not the market believes them, that's when you lose credibility. So, right now, the ECB, Christine Lagarde might say something. Steve, what do you think?
I think it is very likely.
It's very likely that what? Likely what?
I think it is very likely that she's going to say something that the market isn't expecting, because I don't consider this a coincidence that we're seeing this reversal in policy coming in tandem from all central banks. There are two explanations about that. Explanation number one, they coordinate with each other behind the scenes, which is extremely likely. But even if that's not the case, then there is the other explanation that, politically speaking, once you see one big central bank starting reacting to an obvious problem that has been politicized now for obvious reasons, and I'm talking about inflation, then you're even more pressured to do something about it, because then the question becomes even more prominent, why others are doing something about it and we're not, right? And also, let's not forget that when others start moving, since FX is always pairs, right? X currency versus Y currency. It makes it even easier for you to do something, because, if the other central bank is turning less dovish and at some point, let's say, more hawkish, then that gives you the ability to do the same without your currency significantly appreciating against the other. So I do think that there is a very decent chance that Lagarde is going to, I'm not saying turn hawkish, but produce something that is not expected from the market in the direction of being less dovish.
Yeah, and I agree with you, Steve. And remember, the ECB is at this stage in the game, they are going to be following other central banks like the Bank of England, like the Fed, and you've got every central bank that's I'm sorry.
Look at the Bank of Canada. Half an hour before the FOMC, Macklin came out talking hawkish.
Yeah, and that actually reversed. If you guys weren't watching the dollar Canadian, that reversed the dollar Canadian from near the 129 level ahead of the FOMC, and really created this false breakdown too.
So Steve's right. You know, they're all going to move in the same way, like they all coordinated the response to the pandemic and everything else. I think the risk for Lagarde today on being hawkish is talking about inflation. I don't think she can be bullish about the virus because Europe was locking down before Omicron. They were already, you know, Austria was locking down, Germany was locking down. The virus was an issue before this variation came out. But I think if she joins the club on saying that inflation isn't as transitory as we believed and we may have to act, that's the signal, I think, for the hawkish twist for the ECB.
Yeah. All right. Well, you know, that's something that's going to be really interesting. Thank you, Ryan. So here we got. We're just. I want to point out a few things before Dale takes over. He's got a trader coming in, which is good. But I want to talk a little bit about just a few things that are happening. So here we got the S&P that are punching it. It's punching into new all-time highs where you can see where the futures are really pushing higher. Remember, the upper end of this trend line is around 48. Well, now it's around 48.50. We are entering that period where it's like, you know, we might get like a continued Santa Claus rally, then a continuation grind higher. I talked with Chris Weston at Pepperstone about this. Look, you know, you're going into year end. And what's the S&P up for the year? Anybody got a number for me? I think it's 20.
Roughly 25%, something like that.
Yeah. So if the S&P is up 25%, right, and you're a portfolio manager, and let's say you're just up 10% or 15%, 12%, anything sub whatever the index is up, your risk at this point in time, if you do not have your wee laid out in the market right now, you are at risk of redemptions at the end of this year. If I'm an investor and I look at you and I go, you can't even beat the S&P, I'm just going to buy an index fund. I can do better just buying an index fund right now. Why should I pay you your management fee, your percent? You're 2 and 20 on a meager 10% return or 14% return or whatever it is, and you don't even have the balls to be in the market. Yeah, I'm going to take my money away from you. So everybody's got to chase this market higher at the end of the year. That's the risk right now, and we get in a low volatility environment. We get past all the central bank activity this week. And we're getting into, you know, Christmas week next week, and then the week following Christmas, you know, after whatever the 27th or whatever it is, you just get this grind higher because people got to put money to work, whether you agree with it or not, whether you think it's the right trade or not. And what is that going to lead? You know, we get past all the central bank activity. What's that going to lead the Aussie to? By the way, the Aussie has an inverted head and shoulder pattern. I commend those of you that were with me at 70 cents buying the Aussie dollar at the 69, 90, 70 cents and the big 38% retracement. Now that inverted head and shoulder pattern points to 73 cents. Things like that are going to happen. Dollar Canadian, probably trade back to the 200-day moving average. You know, you take take some of the emerging market currencies. Dollar Mexican peso. Hell, that risk is that we, you know, maybe even trade back towards the 200-day moving average if we break this channel. You know, you have the US dollar, South African rand. I still am bullish this thing, but I'm going to end up probably buying it here at 15.50. Definitely not buying it up here in this in this channel up here. You know, so there are things that are going to take place in the markets, and like, you know, you have the currency market, the dollar index. I told everybody listening to the private webinars that we have for the ForexAnalytix subscribers. By the way, guys, if you are a ForexAnalytix subscriber, you have these webinars, not only the F.A.C.E one that you're listening to now that's free, you have the European crossover, the daily roundup, the morning edge, and the Spanish webinars for everybody. But I explained to everybody yesterday, if we get a false breakout right here and the dollar turns negative and closes at the end of the day, at the lows of the day, do not step in front of the dollar because that is a false breakout. That's going to lead us to a breakdown. Now the dollar index looks like we are on pace to trade back to the channel support over the course of the next couple of weeks, which will take us down to 94, roughly 94.50. So you think about all of this that's happening, if the dollar is selling off, emerging market currencies are strengthening, commodity currencies are strengthening. What do you think is happening to the S&P at that point in time?
A risk on, buddy.
Risk on it is, right? And so I think that's the risk. Now, we have about 5 minutes left until Dale has to take over for the interview. So let's go around the robin really quick, and let's start off with Stelios.
Yeah.
What are some final thoughts for today ahead of this ECB presser that happens in the next 5 minutes, which we will be in our ForexAnalytix chat rooms talking all about? You got K-Man in there. He's already in there chatting it up. There's Ryan in there posting some stuff. So what do you think, Stel?
I think the yesterday's reaction after the Fed is telling us a lot. I think that the euro is at risk of rallying. I actually disagree. There are a few people saying I'm going to be selling the euro dollar on rallies. I think that the risk is that we continue. And that's why I'm, for people who are members who were on the chat room yesterday, just before the Fed, I bought some silver. That turned out pretty well because I thought the market was very one-sided. I think we still have a way to go, and I think that.
By the way, I just want to say, really nice job. This is look at Stelios. I had to say, when Stelios doesn't trade often, but when he does, he trades to kill. That's a 3% gain in less than or about 24 hours. Way to go!
I just think that this market has more to go. So I think the reaction was pretty powerful. So I think if you put a gun to my head, I'm going to be buying the euro dollar. I think I'm going to be buying dips rather than selling rallies. But that's my view.
All right, Steve, what do you think? You got about a minute. Just any final thoughts here?
I don't need it. I'm 100% with what Stelios said.
Okay, Ryan?
Yeah, don't chase it. Don't chase these moves. Pick your levels. If you get a dip in these pairs, find where the level's been broken, trade against those, give yourself a level to trade against where you can put a stop under if you're wrong, but try not to chase it. Conversely, trade any breaks of topside levels.
All right, there you go, coming from Ryan, the man. And I know we didn't actually talk to K-Man today. I think he is listening in, but K-Man, if you are live and you wanted to mention something before we wrap up, any final thoughts there?
Yeah, I think they're good. Hello, everybody. There have been actually in the statement a few changes of words in the ECB, because before it said that they won't change the interest rates until well after the APP, and now they said today that it was going to be they would end it shortly before raising interest rates. So one or two words have really changed. So there is a bit of a change in tone, and that reminds me of the Fed May-June, where nobody really noticed it, but there was this like one or two words starting to change. So they're still following the playbook, but they are all changing tone. And it's in concert. I think it's not a coincidence. So what I just wanted to point out, I'm long Canada yen. I also bought it, started to buy it on my clem. I was short for Canada.
And by the way, you started buying this Canadian yen yesterday in the chat room, like literally down here at this low tick, which
88.40.
Yeah, that was pretty awesome. And by the way, just so you guys can see, this is the ForexAnalytix. You can just go into the trades room right here. I'm going to just kind of backtrack a little bit to this from today. Like, yeah, you were talking about that Canadian yen right there. Sold a pinch of it even this morning. So really well done.
Yeah. So and I'm waiting for the Bank of Japan really to tell me that they are going to stay hand in hand with the SMB. And if that's the case, I think the yen crosses can rally more into year end.
All right, well, there you go. And, with that dollar yen punching above the 114 level, I know you've been pretty bullish about this with the dollar yen. I mean, you got the dollar yen moving higher, and the dollar weakening against every other currency. That puts the yen pairs a lot higher at this point. So thank you very much for your input, K-Man. Dale, I want to pass it back to you, but before I do so, let me mention a couple of things.
We have data, a lot of data coming out in 5 seconds.
Okay, thanks, Steve. All right, let's do that first. Then we can, what do we got? Sorry, I'm going to pull that all up.
Building permits, housing starts, both better than expected, a little bit, but better.
Okay, there's your data flash, by the way, that is included with ForexAnalytix. Oh, you can see the data it was just populating here.
Jobless claims, 6K difference, so in line.
Okay, so.
And Philly Fed still waiting for that.
Okay.
Oh, weaker.
There it goes.
Oh, yeah,
there it
quite
is.
a bit weaker.
Okay, so a little weaker data. Well, that can just continue to fuel the fire for the dollar higher, or a dollar lower, excuse me, the euro higher, I guess. And remember, we are going into the ECB press conference right now. I wanted to mention, you see the data flash here. That is included with your ForexAnalytix subscription. You can find it right here under calendar. You have a live squawk feed directly from live squawk that's rattling off headlines. You've got, risk management calculator, which I use all the time, by the way. You have our chat rooms. You have our analysis, whether it's basic technical analysis, Elliott wave analysis, harmonic analysis. And you get all of this for $1 for 10 days when you try out ForexAnalytix. It's normally $120 a month. And that's for the premium version. You get to try the premium version. If you want to go with the light version, you still get the mobile app. You still get to listen to all the live webinars, but it's only $19 a month. But you get the premium version when you try it out. Try it out now, because after the first of the year, when we offer our significant discount pricing for our annual and semi-annual and monthly subscriptions, when we offer those discounts, we do not give you a trial because the prices are too good. So if you want to try it out, come join us for the next, week and a half. And jump in the chat rooms, because that's where I'm at. That's where everybody else is at. Dale, it's yours.
A lot of great ideas all the
A
time.
lot of great ideas all day long. If you want to see, this is the general chat room. You want to talk about ideas, just go look through here and just go back and back and back and see all the charts and ideas and things that are talked about all day long.
A lot of support if you're new. People try and help you.
That's right.
Okay, well, thank you, Dream Team. And Roberto, welcome to F.A.C.E.
Hi there, how are you?
I'm doing pretty good. How are you?
I'm doing pretty good as well. I'm just watching the news, actually, now.
Okay,
But-
so have we spoken before, Roberto? Forgive me.
No. No, we haven't
Okay.
spoken yet.
Because, your handle looks so familiar to me. And I appreciate, have I ever asked you before and you declined? Is this the first time that I invited you to be a guest?
Yeah, this is the first time, but
Okay.
I'm really
Okay.
proud of being here. Thanks, Dale.
We learn from everybody. We do have a screen share here, Roberto, if you
Okay.
want to show any charts or anything. And I usually start with a new guest. You see that green box, screen share?
Okay.
Or did you just want to talk?
No, I will share my charts. Just
Okay.
give me a second. That
Okay.
Apple makes it some complicated.
Okay. And I want to ask you, when you were, say, in high school or college, did you know you wanted to be a trader? I had no idea. I went to college in the middle of cornfields, so I ended up trading commodities, but not because I was there. Tell us a little bit about your story and your journey into the trading business. What were you doing prior?
Well, actually, I didn't knew I wanted to be a trader, but now, but my dad he has been in trading commodities and futures for more like 35 years. So it was kind of simple for myself. We are like elevate practitioners, and I've been drawing charts since I was like 14 years old. I didn't actually know what was I doing, but I know.
Yeah.
Well, my dad always tells a nice story when when Steve Jobs was diagnosed of liver cancer, no, pancreas cancer,
Yeah.
and Apple was at that time like $90 more or less the share.
Yeah.
And I was with my dad, let's buy some Apple. No, and I bought my first stock there, and it actually went up. I don't know, all the time. It was like my first contrarian opinion trade.
Oh, how about that? I'm still waiting to Roberto. I'm still waiting to see your screen. Did you click?
It's kind.
What's
I
going
think I
on?
have to shut off my Zoom and get on again.
No, you don't shut off your Zoom. Don't.
So maybe I might not be going to be showing my chart.
There's a green box at the bottom or at the top. Do you see it? Share screen. What happens when you click on it?
There you go.
Okay, see? All right. Now you're up. Okay, so you bought Apple, and you were fortunate to not have to scour the internet to find good people to learn from.
Yeah, I had my dad. I'm actually always looking for new mentors. I've been with I practice a lot of harmonic patterns, Elliott waves. I went to a lot of courses, mainly on the technical side. You actually see news and stuff like that, just to know the perspective of other people. I actually love the cut reports and stuff like that. And we are now working on a fund. We are mainly going with an idea that we have to go short USA and have a lot of commodities going around because of the market cycles. So,
okay, so are you talking about the U.S. stock market, or are you talking about the U.S.
the
dollar?
U.S. stock market thing. So, well, what we actually look a lot is
gold.
Gold. We are actually seeing that even though it's going, well, there's we call it a black hand that is pulling price down, but each time it's a little it can't penetrate down. So
do you think yesterday was a significant low in gold and silver?
Yeah, but we actually this is like an alternative pattern we actually see.
Okay.
We have 3 waves down, maybe a triangle, and maybe if we actually go down this low or even this low at 1714, we might go lower, but we are really confident because of cut reports, because of the situation of the general markets, that the best scenario or the more probable scenario is to go up. And actually I see it like in 2.5K more or less. So we are actually invested now in gold. I think it's like if you compare this to other commodities like energy and other stuff, you can see that gold is like delayed, no? Even though crude oil has fallen a lot, it's recognized this trend line now. So we actually see this market with 2 perspectives, and we are actually looking for low risk trades, no? So
and was that the top in crude, or are you looking for a higher high?
Yeah, we are looking for a higher high. The structure isn't optimal, maybe, but actually, if you can see, RSI is actually really low, and we think that we got a really good chance of going to 78, more or less.
But not in the highs.
Yeah, not a really big
failing
high,
rally. In other words, a failing rally, and then
a
under
failing rally
$60
just for now.
Yeah.
But we see a great chance of going to this level. So in Forex, like $1 is actually, if you trade well, it might be like $1 million. No? So it doesn't really matter the movements. I tend to predict more closer, really, I don't know, short moves, because I'm more like a day trader myself. But in the fund, we actually we started to accumulate some positions in here when we got to like this pocket from the
Right.
more or less triangle. So we started accumulating in more or less 65.
Yeah.
But of course, if you do Elliott waves, you will think, oh, this is like a failed pattern, no? Not a really good. We didn't have any corrections here, and if you see the candles, they are like fading away. So it was probable that we have a correction. We had first started buying here in more or less 80, 78 in energy.
Yeah.
But then we had this failed new high. And
I
when
know
we
I was
touched this,
shorting it except for the big down day. Yeah, the history is interesting, but moving forward, what's your view on the dollar? Yesterday we had a failure.
what's my
after
view
the
on the
Fed.
dollar?
Yeah,
Well, mainly we are expecting that the
because
dollar
you're an
will.
Elliott wave guy. Is
Yeah.
this still a wave 4? And after this pullback, there's another rally, or are we peaking right here?
Well, we have actually discrepancies with my dad. The first one is that if we go to the euro, that's like 50% the dollar index.
Sure.
We can see that we are actually in the 1.8 level. So that's for a Elliottician is like you have to buy now because if it's a three-way pattern, you will. I know my internet is failing a little.
We're stuck on the dollar. Okay.
So
Okay. Cable. All of them. So where do you trade from, Roberto?
we actually trade. I trade from Forex like for a hobby. I like it a lot. The Forex markets, but
No, I mean,
actually now.
from what geographic location? Where do you live?
Where I live in
Yeah.
Mexico right now.
Okay.
And my dad is actually in Argentina, and we are working in actually a fund called Dolphin Fund Bermudas. That is in Bermudas, but actually all the partners and everything is in Argentina right now.
Lots of opportunity in Argentina with all the economic problems there, currency problems, etc.
Yeah, we are actually seeing a big opportunity in Argentina. We are actually starting to develop a fund in Argentina. It's if we get the index, you will see. We had to correct it by inflation. So give me a second. Yeah. Okay, this is Argentina in dollars, actually.
Okay.
We have to do some math to transform it. But
Yeah.
as Elliotticians, we have always prefer like three-way moves. And if you see, this was like kind of impulsive. This is a flat, and then the market does 1, 2, 3, 4, 5. We are now in at least there are two perspectives. One is that we are currently having it's in a congestion zone. But if we break down this zone of 480, probably Argentina will be a great investment for banks, no? Well, from us and everyone, because we got Argentina. We call it with my dad like it's like a crypto for a country, no? It's got the highest and
Yeah, it could appreciate 400% is what you're saying.
Yeah, that it can appreciate a lot and really fast, and it's actually very, very cheap. My dad is there, and in dollar terms, everything is like it's a joke, more or less. So
Really?
you can with I don't know, $1,000, you can live like a rich guy in there. And actually, a couple of years ago, it wasn't that. It wasn't like that. So it's really important to go to the markets that are like sometimes beaten up and start looking for the opportunities there. And there are like a lot of companies that are really, that they have, I don't know, 20, 30 and 40 years of market experience, and they have a lot of infrastructure, but anyways, they are valued so low that it's like the thing, if it goes up, it will be like really fast. No, it's like when you see Elliott wave one pattern is like a huge appreciation, and if you can see this last, you can see that it's like a 5 pattern wave. So we actually need it to get up here, so we can have a C wave that will just at least give you I don't know 100% performance on this particular market.
What kind of spreads do you have to pay with who, say for example, who you trade through to get long Argent? What's the name of is it a peso still? Argentine,
yeah,
what?
the peso. Well, actually, it's kind of difficult now, but but they are having some political change. So maybe
So they have currency controls, and you can't buy or sell.
They have currency control, and there's like a black market for dollars. It's called dollar blue, and in dollar blue is the real, I don't know, the real price of dollars. But I think that they cannot block it anymore. No, the real dollar.
I hope you're right, because you know the people of Argentina have been through so much, and you know haven't really, you know, participated in this boom that we've had in the world. You know, they've had leaders they've had hope in, and their currency changes colors all the time. I think it's Doug Casey who hides out there, you know, has a big ranch, and you know, so that when the whole world is killing each other, you know, he could still trade Swiss francs from there, right?
We think that this is like the next opportunity will be emerging markets, and mainly on Latin American side. If you see, Brazil was once a monster, I think, really powerful, and it's been like in correction since the 2008 crash. If you see, we never seen a new high since then. But if you actually put some Elliott waves in this, you will see that this is an A, B, and C pattern. So you might think that this is actually a flat, or even though if you're like a more conservative guy and you want to do like a triangle, a huge triangle in here, when Brazil actually gets over this point, because you will have a great results in Brazil. So even though they are like beaten up, actually this when market when commodities prices actually go up, Argentina, Brazil, and these countries will actually go really up. They are really commoditized.
Because of the agriculture, right? All the soybeans, they're massive producers. Brazil of beans, right?
Yeah, exactly. That's why also I like a lot Australian markets as well.
You like Australia too, huh?
Yeah, I like the Aussie.
So let me ask you this: it's a theme. Okay. So Brazil, Argentina, other emerging market countries have been under pressure because they denominated their debt in dollars over the years. So if the dollar is peaking out here, even if we go to 98 Dixie or even 100, and we get a bear market in the dollar, this is where the money flow is going to go. It's not going to go into IBM. It's going to go into Petrobras and you know, Brazilian and Argentinian equities, right? Is that your emerging markets is a play of 2022, because a bear market in the dollar will be the jet fuel for this move. Am I reading you correctly?
Yeah, that's exactly the view.
Well, we agree. So now I'm nervous about my position.
Oh, don't be nervous.
I'm kidding you.
there are always stop loss there that will
So
say,
can you could buy a nice place in Argentina for
yeah,
$100,000?
yes, you can actually. When if you want to live in the best parts in Argentina, the rent will never go up. I don't know, $1,000. That's really cheap, but because we are talking like if you live in, I don't know, Manhattan, in the Manhattan of Argentina, no, Puerto Madero or Recoleta,
Yeah.
it's really cheap for us actually. For people that live outside and actually get their income in dollars, it's like amazing. You can go there and spend nothing and have
You
a
feel
really
safe
nice life.
there?
Yeah, if you are, it's like in everywhere, no? If you
True.
think in Mexico, many people will say, no, there are lots of narcos and stuff like that. But if you actually go to the nice places, well, Mexico is extremely safe.
Where the money is.
Yeah, exactly. Because there are lots of millionaires here and they want to be safe. So places where rich people go, are actually really safe. And in Argentina is the same.
Okay. And that's where, okay, so you shuttle back and forth between Argentina and Mexico, huh?
Yeah, well, actually, I moved out of Argentina when the new president got there. I thought that, contrary opinion, it's like we have to go. But actually, now I love Mexico so much that I travel to Argentina. I don't live there.
I see.
travel a lot.
So your president turned out to be not as much of a nightmare as you thought because he was pretty left, right?
Yeah.
Socialist type of policies, like Biden is trying to get across, but Mexico will also have the advantage when the dollar turns with its natural resource base and everyone moving manufacturing with the adversarial situation with China and what's happening in Asia. Don't you think Mexico is going to benefit with people moving production away from Asia and more into Mexico?
Well, I'm having some doubts because the cycle, I don't know. Sometimes I see it and I see Asia moving on and doing great by themselves. So actually, we are in the midpoint that we have to see. Well, I think markets are changing their hands as I don't know, USA and European markets are like tied by the hands, so they can do anything. We have like negative rates and stuff like that, and that's when you lose like the monetary policy, something will happen and it will be like really sharp.
Yeah. So the U.S. and Western Europe is going the way of what South America has gone through for decades.
Yeah, exactly.
Currency crises. We got used to hearing about, currency crisis in Argentina, and you'd see guys driving Mercedes because, they went through a boom and now they were in a bust, and they get out their Mercedes and chase down cattle in a field for no, really. I mean, I remember seeing the films of the nouveau riche having to go out and slaughter a cow so their family could eat.
Yeah, that's true because well, in the 90s, it's what like $1 was like 1 peso. So actually, if you I don't know worked in the mall, you could get like $2,000 from 1998. And it was like great for Argentinians. They actually lived like rich. I had friends that their parents told me, hey, when it was 1-1, I could go to New York to buy clothes. Why go to the mall in Argentina if we can go to New York? So actually they tasted the riches. But nowadays, well, because they are printing money like crazy and stuff like that, it's actually like an alert. No, Argentina has lived this for I don't know a decade more or less, printing money and stuff, and it also it brought I don't know a huge crisis, and now they are actually paying it.
Do you think the whole world's going to go crypto?
No, I don't think that. I think that crypto is more or less like people actually talking about it because of the performance crypto gives us. But if you see if U.S. markets fall, well, Bitcoin also falls. So it's not like a real value. It's actually a risk asset.
It's a commodity. I've heard people say, kind of like a commodity. So I wanted to ask you, why you're on Twitter? Do you have a business model? Do you put out a newsletter? Or is it mainly just you trading your own account and you and your dad putting together some type of fund?
No, our main goal, we always gave like analysis and in Elliott waves, harmonics, and we actually do a lot of education for people in Latin America. But I trade Forex, my Forex account personally, because I like a lot the Forex world. I was actually, I think that the first boom was stocks in the 90s. Then it was the Forex markets in the 2010, more or less, because of the leverage. And now all people are seeing only cryptos, because of the high performance. But I actually learned to love the currency markets so much that I cannot stop trading them. So I trade my personal account. The fund is actually a new project that we. I liked a lot of commodities because we want to see the commodity market is like a must for currency markets.
Yes.
So it's actually
you like agricultural commodities at these prices.
Yeah, soy and everything, it's actually falling a lot. If we actually see, this
we had a nice correction from over $20 to $12. Oh yeah, cotton, coffee, everything.
Everything, yeah. If we see like soybeans, you can see the futures. This looks like a more like a forward wave, and we will, and I think that we might have a new high in the near years.
What's your favorite commodity before I let you go? And I'm so glad that I reached out to you on Twitter. You're an interesting guy, Roberto.
Thanks a lot. Well, I actually will be called like.
You're getting a comment from Laura. Well, she's a regular in our seminar, and she lives in Buenos Aires. And says Argentina is a wasted country. Government prints with no limit for anything and everything you can imagine. Our pesos are nice colored paper pieces no one wants.
Yeah, that's true. I think
that's why Roberto sees it as an opportunity.
Yeah, that's true.
I don't know why, but
well, because we are contrary opinions. So
all right,
we actually, if you, I don't know, when you have really bad news, generally speaking, actually it's a good opportunity. My dad's first mentor was a really great trader, and he actually invests in Argentina in the Malvinas War. So he bought everything in Malvinas, and when Argentina was actually good and it was 1-1, he started selling all his stocks, and he got a lot of money from that. So we, generally speaking, you want to invest in the cheap things that are going to grow.
Then why don't you buy the Turkish lira?
Why don't I buy the Turkish lira? Because actually,
it's cheap.
It's cheap. That's why you have to go there and start buying like a house or something that will last for a time.
But not their currency.
Not the currency. No, currency is like an indicator of the economic or the perception of people.
Is sick.
Yeah, but if you go to Turkey, I was in Istanbul like, I don't know, 2 years ago when the Turkish lira went to 7. I was actually, and you can see that they are really rich. So the country is really nice. Bosphorus is amazing. You got European and Asian like a culture. It's really nice. And yeah, the Turkish lira went up, but and might go up a little bit more. But actually, it's like if it's cheap for you to buy something there, but you should go and buy it. Not like Venezuela, of course, but that's a political thing. But Argentina, I don't think that people from Argentina will let the country go that bad. No?
Okay.
And Argentina doesn't have a military power that powerful as Venezuelan. So
okay, well, I have a new nickname for you. Roberto, Blood on the Streets, Ruarte.
right on the streets. That's really
Roberto, the Grave Dancer.
the great
Ruarte.
dance.
You like that one too? You could use either one. You could use whichever one you want. It was a pleasure meeting you, Roberto. I appreciate you coming.
Thanks a lot, Dale. I would change my my nickname to, I don't know, Roberto the Opportunity Wonder or something like that.
Oh, you want a nickname? Okay. All right. Well, we'll work on it, but grave dancer is they call people that buy foreclosure properties that have made millions buying after a bust, grave dancers. So anyway, it was really nice meeting you. I appreciate also your views that there are opportunities from markets that have been depressed by a recovering dollar that we had this year, and that might reverse. So don't be myopic and only look at the US. Maybe diversify overseas and diversify your fiat into perhaps some of these third world currencies, but at least have some gold, right?
Yeah. Thanks a lot,
buddy. And you know what? You're my trading warrior brother now.
Okay.
All right.
Thanks a lot.
So I appreciate it. Let's do this again. Keep in touch, Roberto. Everyone could follow Roberto at Trader Ruarte.
Yeah.
On Twitter. You don't have a website or anything, do you?
Yeah, it's Ruarte Reports.
Okay, you want to type it in chat?
Sure.
Okay, so that's a wrap, everybody. We'll wrap up the week with you, and remember, count your blessings. Good hunting the rest of the day, and take Blake up. And if you haven't hung out with the team, you need to get into the chat room for $1 for 10 days and check it out, and then you'll be primed for good prices early next year. You're welcome, Panagito. Okay, there you go. RaorteReports.com. All right. You could join the team in 12 minutes. Ran a little bit over on the morning edge. And see everyone tomorrow. Adios. Good hunting.